So today's topic, as far as I'm concerned, is validating change of character. Is a constant within the whatever validating CHoCH. Okay. So validating CHoCH, that is what we're going to be looking at for today. Let me see if I can share this session, this link with some community. Trying me forward. So now, in this meeting, we're going to talk about change of character, validating change of character. Many a times we find ourselves trying to trade in a way that we often get confused with. Okay, what is change of character? Change of character equally is can be said to be equal to BMS, and that's BMS means break of structure. However, it simply means that sometimes when the market is going down like this, right, the market is forming lower highs in this case, and we say the market is in a downtrend. A time will come that the market will be unable to form a new low, and then a new high will be set. This is the very first time that the market created a new high, right? In this case, they will say the market has formed its first higher high. This is a low, and this is a high, right? So we are looking at a case where the market formed the first higher high. In this case, we changed the market. We said the market has changed character, CHoCH. Now, what is the character in place here? From the Wyckoff principle, character means who is actually dominating the market. Do we have a bullish character or a bearish character? In a bearish characterized market is sloping to the downward side. And that is what we call the market is sloping to the downward. And then we say, okay, the character in this market are bearish. Now, a change of character occurs when the sellers in the market change role and then become buyers. So the very first time you want to see is when you see the first higher high in a bullish cycle. When you see the first higher high in a bullish cycle, it means that sellers are no longer there. Now buyers have stepped in. Characters have switched. That is what we bring the name change of character. Some school of thought said it should be called BMS, break of structure. Structure simply is broken when bullishness turns to bearishness. We say structure has broken. Okay, now that settles that. So now let's look at things. We have seen a case where the market will create this kind of format, drop, and still continue to go up. Now the question is does it mean that this change of character, a low and lower low pattern formation that we see here is not a valid one? Normally, we expect the market to continue going down, but on the contrary, the market took out this high point and keep going up continually. And we have seen ourselves becoming victims in the speculative market looking at this structure. Now, what can we do to possibly validate our structure? That is what the essence of this class is going to be, validating our change of character so that we will not be seen haunting the market at the very peak in the wrong moment, and then not also out of fear of this happened before and it failed and then it could fail again. No, we have to look at some specific structures that matters in the market, and that is what this market class is all about. Now, what is change of character? We have just explained it. Now, I was in a meeting this morning. Somebody was asking me, I was asking somebody, what is impulsive? Now, the term impulsive, let's look at it this way. So I'm just bringing out this. Now, taking a look at this market, this diagram here, we have the corrective, the corrective phase, and we have the impulsive phase. Now, a corrective phase is that part of the market that is seen to be consolidating, that is range bound, that part of the market that is not having a specific direction now flow. Now let's look at this way. Market was coming down, all of a sudden it started doing this. Then it goes down again, all of a sudden it started doing this. Then it goes down again. Now, in each case, at this point here, we say these are impulsive structure. We say these are corrective structure. So we now say, okay, what in between from year to year is an impulse, from year to year is an impulse, from year to year is an impulse. Okay, sometimes we have something like this occurring in the market. Market will do this. And then we have that thing we call change of character here. The question is, why did this level, having violated, still failed at this base and continue to go down? Now, everything we talked about as regards trading springs from the genesis of Wyckoff principle and the Elochian principle. I really know perhaps you have heard about the flat corrective structure and the zigzag corrective structure and the triangle corrective structure. These are integral components that we need to factor in this market. When a market make a corrective phase new low, structural low, violate it, that is not a change of character. You will need to violate a complete impulse move like this. Let's say we have a complete impulse move to have a confirmed change of character. In a case where the market did this, sorry, let me put this one here. We want to remove this. Now, when you look at this, now, this at this point only created a new high at this point. The high at this point is not significant. So invariably, this is just like we're having a high, a swing from here. What happened at this point? We add a swing to this point. This swing is corrective in nature, not impulsive. So the violation of the low at this point is not a valid change of character, and therefore could be seen to fail for a continuation. Now, under this corrective phase, the most complex part of trading is corrective structure. Okay, trading the corrective phase in the market is the most complex part in this trading. Now, when you have a structure, in this case now, ABC up, which is corrective, the low, even if it is violated, it is not a confirmed change of character. Now, what therefore is a change of character? When market goes up, AB, so let's say our A and B, our A, B. In this case is what we call impulse. Impulse could be a swipe to the up, and it could be a 3 push in one direction, completing it this way, then you have a change of character. In this case, we say the market should fill its liquidity void, maybe around this point, and then continue to sell. Now, when the market corrects, sorry, I think I have to set this to mute. Okay, when the market corrects, in this case, to the upside at this point, you take your sell with view that you have a valid change of character. Let's go to the market phase. On Friday, I posted a chart and I asked a question as regards if that chart is I think it's USD/JPY on intraday perspective. Okay, I think Euro GBP. Okay, I think this is Euro GBP that I posted this chart on Friday, and I asked, what if this is a valid structure? Okay, so like as you can see, we have a low at this point. We have a low at this point, and we have a high at this point. Market made this like this, then violate to the downside. And I ask if this is a valid change of character. Of course, from the normal definition, which means that the first lower low in a bullish market is a change of character, but you now have to look at the structure at the top that was violated. Is it an impulse or a corrective? The violated swing must be a confirmed impulse. Now, taking a look at this is equally not the same thing as, let's say you have something like this. If you have a structure like this in the market, this level is a significant high because it creates a new structure high, and this is a significant high because it creates a new structure high. This structure is not the same thing as this because this high is valid, this is valid, and this is valid. But when you have structure like this, this is not a valid high because it did not create a new structure high above this level. And therefore, at this point, if this is insane, this is not a valid change of character. Market has tendency to continue upside. So invariably, if you look at the Elliotian way of analyzing the market, you see that this is what we call a flat corrective. So let's go to the internet and possibly look at what flat is. Flat correct. So very simple. You saw what it is: irregular flat or expanded flat. Market make a two structure like this, swipe down, then the next move is to the upside. Taking a look at this also, you will see that market made a move like this. Well, normally, this is where the SMC concept in a layman come to say you have a change of character at this point, and yet the market continue to go to the upside. Why? Because this move AB is not a full impulse, it is rather a corrective phase, and therefore this could be termed as an expanded flat in the making, and therefore a need to anticipate further correction. So when you see your change of character printing, ask yourself, the AB leg that was violated, is it an impulse leg or a corrective leg? If it is an impulse leg, this is what you're going to be having. So, or this is what you're going to be having. Not a two swing. I have told you that a corrective is something like a two swing downward, a three swing upward. Why an impulse is either a swipe or a three push downward, or a swipe up or a three push upward. These are visual aided analysis that does not require you to input any indicator to your charts. So what are the second parameter you need to watch out for when validating a change of character? The second parameter that you need to watch out for when validating a change of character is this. You want to ask yourself, a change of character is validated if the last two high or the last two low, in this case, we have what we call the high, and then we have a higher high. If the linkage of the last two high gives you an impression of a classic bearish divergence, then you have a sign that the market has gotten to the peak, and therefore a possible weakness is envisaged. A possible weakness is envisaged in that kind of market, and therefore when you now have the violation of the low created before that high was set, you have a valid change of character that can spell a further downward movement. Do you get that logic? Now, all things being equal, if you ask yourself two things in question that you need to ask yourself to validate a change of character are your AB leg. This is your AB leg in this case. Your AB leg is the last swing to the upside. If before it is validated, by the time you look at it, ask yourself a question. This swing, is it an impulsive swing or a corrective swing? If it is an impulsive swing, tick it first, one is achieved. Then from the last two significant I created, do you have a classical divergence? It could be bearish or bullish. If the answer is yes, you have a divergence, tick it too, like this. Now, immediately the low is validated, then you now have a variation of character that you could possibly trade with. Now, regardless of the market you trade in, let's say you're looking, let's look at USJPY now. I'm looking at USJPY. I want to ask myself, okay, this, and this happens to be the last structural swing, whatever. So market got to this point, took out this low here. To me, this is a valid change of character. The question is this a valid change of character? Ask yourself that question. And how do you get to answer the question? You look at the AB swing structure. You look at the AB. This is the AB leg, the last swing to the upside. You look at it critically and ask yourself a question. Is it a swing, an impulse or a corrective? The question is, in this case, this is a corrective because this I at this point did not make a structural high above at this point, and therefore it's not validly recognized. Then what do you want to do? Even if this market make a swipe to the downside, you still expect a possible liquidity grab above this I, because that is not a valid change of what? Character as regards. But in this case, I'm going to be considering this I and this I together. If it is anything to go by and meet the same, do we have a technical divergence in this market? The answer should be yes, because we just have it. Even if you see that I, we will now be expecting a structure that will warrant us to sell and possibly even look at a buyback from this, because the weekly structure indicates bullishness. How do you know the weekly structure indicates bullishness in this market? Control this. How do you know? We know because taking a look at the weekly candlestick, you can see that it's still having a higher high. So we only expect to buy the pullback this week for a new high, maybe around this point. As you can see, if you pay attention to what we have here, this is going to be a demand, and this is going to be another demand. This is going to be a breakout structure. So I will expect a trade back to this level for, let's say I'm looking at this, for us to buy, and then looking at something like that, all things being equal. But this is where we're going to be buying this week, around 130, 39 zone. And that is very easy to track or follow, if I may ask. Like I said, this class should not be a very long one, but a one that will possibly put the icing on the cake for one or two individuals. In case you have questions, I would love to possibly have it from you guys. Questions, if you have questions, just unmute yourself. If you have a question, unmute yourself and let's talk.
Mr. TJ.
Yes, sir.
This is Anita Edwin.
Okay.
The chart you posted. Can you go back to it? Euro GBP, I think.
Yes.
And you're trying to explain why that trade can become bearish.
Why? Okay. What I ask is this. This
Yes.
is the chart. Is this a valid change of character? Now, the point, yeah. What I want to ask, what I was asking for is whether you understand this clause that this violation here is not impulsive. The AB
Yes.
is not impulsive,
Understood.
and therefore this is not a valid change of character. A valid change of character occurs only when you violate an impulsive low, which is a complete swing structure. You get? Based on what I have explained. And then that this happens to be a 3 swipe to the eye, and then this violation occur, this will be a valid change of character that will warrant us to sell. And this is the same thing that happens in the USA CHF, as far as business is, I mean, Euro GBP, as far as business is concerned, the market violated, yet still went back up and picked a new high at this point, and that invalidated whatever. So, but from the point of things, when you see this level, you should know that the trade back to this level will warrant us to take a buy to the upside. If I may ask you, why did this market go up from here? You can see that we have a zone at this point here.
Yes.
Right? We had a violation at this point. This is I, and this is violation, and then we have a zone at this point. This is what we call the SNRC type 1 buy entry, pullback, and then new high. Now, we're going to be expecting, what are we expecting this week? We had a structural formation of demand at this point, right?
Yes.
So this is what is regulating the market at the moment. However, I'm going to be seeing a possible market drive into this level, like A, B, and then maybe C, us get to this point, then we can take a buy to the upside for the week. Considering the fact that the weekly structure is still very much bullish in the making.
At what point can it be a sell?
At
if
what
it
point,
breaks the, yes.
At what point are we going to be a sell? Like,
yeah, yes.
Now let's take a look critically at this market structure now. So this is a demand. True or false?
Yes, sir. True.
Because this market created a base that formed a new high in the market, and therefore this is a demand, the origin of the move of this particular swing to the high side.
Yes.
Now, below it, we have what we call a liquidity, right?
Yes.
So I'm looking at these two levels to be nested, right? So
yes,
now
nested, yes.
this market has given us a break of structure at this point, right? There's a break of structure at this point. Low formation, and then a new low already formed at this point. So if that is anything to go by, I'm looking at around this point, this block zone, and then we could see a pin bar or a bearish candle formation here that will warrant us to drive into this point, and then we could take this buy. Do you get the logic?
What can happen? Yeah, what can happen for there to be a sell? If it breaks that,
if the market gets to this zone, which is the breaker here, you're looking for a bearish candlestick confirmation, which could either be a pin bar or a railroad track or an engulfing. Okay. Once you see it, you just mark your zone. That is your point of interest. Then you look for candle pattern formation, which is either going to be a pin bar, engulfing, a railroad track, whichever that forms that will warrant to sell this market to this level. You already know where you are going to. So you just need to you just need to find a low risk entry in this market. If this market is confusing, go to the lower time frame, let's say 5 minutes.
Yes.
Now, in this 5 minutes, you could see that the market has given us a low form violation here. And then we could equally see that the market had a structure like this. So we could see that the market has a structure like this here. So we could see that, okay, we could expect something like this, tap, drop, right?
Yes.
And that settles it. Why are we tapping drop here? Because the 240 EMA is forming a confluence at that point.
Yes, sure. Yes. Thank you so much.
All right. So with that, if I still have any other question, I would want you to unmute yourself and then let's talk briefly. Otherwise, if there's no question, this meeting is ended. If there's no question, I want to end this meeting. If there's a question, let's discuss it now. You can ask your question. Mr. Bayo, Chichi, Chima, Joshua, Etoni, Knight, Nkechi, you are there. Ask your question now.
Boss DJ.
Yes, good morning, man.
I greet you, sir.
I humble.
Okay, so one of the parameters to confirm your valid change of character is you must cite a divergence, right?
The divergence is just the divergence citing is just a clause, a confirmation that the market has gotten to the peak. You know, you don't want to start trading a change of character in the middle of the swing, so that you don't become a victim of, like, a divergence simply means sign that the market has peaked. Do you understand?
Yeah.
So it's just giving you extra confirmation that if you sell this market after the confirmation, then you are good to go. You get that?
Yes.
But the most important criteria to confirm that change of character is either valid or wrong. If you look at change of character that fails in the market, most time the AB leg is not an impulse. Immediately this AB leg is not an impulse and it is violated, you have not seen a change of character. The market can still continue to the upside. Even if there is divergence in that market.
Okay.
Are you getting it? So I need to go back to the history, track your chart, and find out area on your chart where the market create a change of character and still fail. You will discover that the problem of failure resolved because this is not impulsive. This is the beginning of your analysis, whether the change of character is valid or not. The second thing that you need to watch out for is that when the change of character is seen and the AB leg is impulsive, ask yourself, is the peak formation accompanied with a visible divergence? If the answer is yes, you have money on the floor, pick it.
Okay.
Now, like this morning, I posted this chart to the group. I asked myself, this is a liquidity grab at the top here. A liquidity grab is confirmed if the breaker of the violator is yet again violated. Abby, this is the breaker here, right?
Yes.
It went up, violate, and then it came back here and violate. Then the question is, market will only just make a pullback to the trade boss, and then we could see a new low formation towards this level. And therefore, we could rate this demand at this point. This is our significant demand, but I will be very much comfortable with this point here, where I will be like, before I could expect a buy. Mind you, the market structure from the weekly perspective indicates bullishness. So we could continue buying this market into, we have a high here on the weekly structure.
Yes.
So we could see this market come back, form a base buy point, and then go back and rate the high created at 143 this week or next week, before this market eventually starts selling for the long term, creating a liquidity grab at that. So because we still have this market movement to go up, so we want to find a low risk entry on the lower time frame that will warrant us to make all the money we need to make. So like now, based on this, on 30 minutes time frame, I can see the weekly structure and I can see the high time frame point of interest or key level to map out, to watch out for, and then I could just do everything I want to do on this time frame without switching it to another one. And that's it. That is just the way to go. Thank you very much. Do have a wonderful moment. Bye-bye.